1590 PTA, Ventura. Following is a repeating program. Gold Broadcasting is not responsible for its content.
Some supposed to receive some additional compensation for his participation during the state program.
Real estate loans and other financial opportunities mentioned on this show are offered by various companies, entities, and/or organizations that may not be directly owned, managed, or controlled by the real estate lender. All credit decisions, including loan approval rate and APR, will vary based on your specific loan request and credit profile. The information provided on this show is merely to allow the listener the ability to become more familiar with such potential opportunities and to obtain more detailed information on the suitability of such opportunities to the listener's personal and financial situation from the companies, entities, and/or organizations involved.
A new home you've dreamt about for years, and there's only one thing standing in your way: getting a loan. Rest assured, United Mortgage Corporation of America is here to help make your dream a reality. Get answers, get results, get the service you deserve. What kind of loan do you have? Call now at 888-LIFE-980. That's 888-5433-980. Or go to the web at yourrealestatelife.com and take action today.
Good morning and welcome to Your Real Estate Life. It's your day in real estate radio. I'm Mike Harris. I'm your host. I'm a mortgage lender. I'm president and CEO of United Mortgage Corporation of America, NMLS 3189, MLO number 233410. I'm also a California real estate broker, but I don't list, I don't sell. I lend. I also have an insurance license for life, health, and disability, but I don't utilize that to write, but I utilize it to help educate my clients so they can get the right services and get the right help that they need. It's part of your offensive line, protecting you against that defense. You know, we're on 2 stations, but we're also now on YouTube. We're at Your Real Estate Life on YouTube. And you can also go to our websites and listen to the audio of our programs by going to yourrealestatelife.com or going to unitedforloans.com, FORloans.com. Our programs are on radio or on Fox Sports, Ventura, AM 1590, 94.7 FM. And we're also on K-Earth 101. We're on Saturdays, and we're on every other Sunday on K-Earth 101. Now, write down our number. You're going to need it. 888-543-3980. That's 888-543-3980. Now, I gave you our websites, yourrealestatelife.com and unitedforloans.com, FORloans.com, because we are for loans, not for the interest that you're paying. Very, very important. You know, today's program, I'm going to talk about inflation. We're going to talk about interest rates, and we're going to talk about jobs. All of these things matter. Now, I'm a loan guy. What are you talking about? Well, all these things influence where interest rates are heading. And as I've been saying on the program, we're heading down. We are at 25 to 25 calendar year lows. It's not 25-year lows. It's 2025 lows. Now, we're already heading backwards and capturing parts of 24. But we're seeing rates in the 6s, but also now in the high 5s. But it really depends upon what it is you're spending to gain that result. Now, we have individuals that want to pay points and fees in order to buy down the rate. Okay, you got a lower payment, but how much did it cost you to get there? Now, if it's other people's money, maybe we'd consider that thought. But of course, then maybe it's trying to keep that percentage or sales price of your property. But now you're getting a concession towards closing costs. So there's different ways to format your program and your purchase of your home. And that's where you have professionals helping you negotiate. As I said, I'm a licensed broker, but I don't list, I don't sell. I refer for that process. So we bring you the news and the effects to your real estate life, whether it's your money, your future. You know, we look at the focusing factors that help shape the financial decisions of today. And as I said, that's inflation, it's interest rates, and your jobs. Now, why does inflation really matter? Inflation is the rate at which the general prices and levels of goods and services rise over time. It's like going to the grocery store, and yeah, we've all experienced it. You go to the grocery store and you go, wow, how did we get to this total? I didn't buy half as many things as I bought before. Well, maybe you went down to the meat department and you saw the prices on some of those things. It doesn't stretch as far as it used to, whether it's, as I said, your groceries, your gas, your housing, everything, and the costs that climb. And if they move faster than your wages, then you got a problem. You don't have as much stability. Consumers and businesses can't plan with much certainty. So you're trying to control that inflation. Now, in next week's program, we talk a lot about the Fed and the Fed factor and what the Fed does to help control employment and inflation and the delicate balance. But in a couple of weeks, we have that Fed meeting. It's already 100%. The Fed's going to go a quarter. The issue I have now is what's going to happen in October. I think it's certain that we're going in October too. Some people are thinking, oh my gosh, we're going to go a half. Nah, we're not going to go a half yet. It's going to be a quarter and a quarter. Now, we're looking at the quarter then in December. Now, every 6 weeks, we have a Fed meeting. So to help stabilize where we are now in our current inflationary environment and jobs economy, there's room for the first quarter and their pricing, and now the second and soon the third. So as the pricing comes in, which has already been priced into the mortgage market already, the first move, the second move is starting to get priced in. It's just starting. Rates are getting even better. But what happens is when we have that Fed meeting, we're going to see a slight push off of our best levels before we start getting the engine running again to go get them again. So I say the best interest rates are right before a Fed move. Then we'll start pricing in the next move. And prior to the next Fed meeting, we're at our better levels. So that's generally what has occurred. A year ago, we were in the same area or direction. And right after the Fed move, oh my gosh, rates were higher. We've just now, a year later, have recaptured that position. I don't want you to lose the opportunity. Let's talk. 888-543-3980. That's 888-543-3980. The Fed's trying to target a 2% inflationary rate. We've come way off our highs, but we're not quite at that level. But we're tumbling to that level. And when we tumble to that level, the thing that I like to emphasize is, maybe it's not as much anymore, but when you take a shower, you go put on the hot water and you want hot water right away. You're kind of greedy with that. I don't have time to waste. I want hot water and it's not hot enough. So you turn it on full. Problem is when it eventually gets into now it's really scalding hot. So the thing is, if we're not patient, we want hot water right away, but then we have to dial it back. And what the Fed's trying to do, not to do things too much, so it overshoots to have a problem differently. So it's making sure the need's there and a little bit, and they're being patient. The problem is a lot of people aren't patient. They want it done now. Let's get it done. I don't have time for this stuff. Let's just do it. The problem is doing it can create other issues if it's not done in the right temperament. So these are the things that people debate, and then not fast enough, not good enough, and then too much. Well, the Fed should have done this a long time ago. Well, maybe yes, but then you got to look at the whole recipe and the whole process. So overheating or falling into deflation, that's not what we want. Inflation gets too high, it hurts the household budgets, it destabilizes markets. Inflation is too low, can signal weak demand and stall growth. So we really got to watch this very carefully. In this upcoming week, we're going to be looking at producer price index, PPI on the 10th, and consumer price index on the 11th. A lot going on. We got an exciting program. I'm Mike Harris. We'll have more after the break.
Your equity position has started to improve? Call about the removal of your private mortgage insurance or mortgage insurance premium and save money today. Call 888-5433-980.
What if I told you everything you understood to be true about money is not? If there was a program to eliminate most of your interest in your life and pay off all your debts, personal or business, even mortgages, in as little as 1/3 to 1/2 the normal time without refinancing and without changing your lifestyle, would you want to learn more? Call 888-543-3980 and request your information today, or email at interest@aheadformoney.com. That's interest@aheadformoney.com.
Welcome back to Your Real Estate Life. It's your day in real estate radio. I'm Mike Harris, President and CEO of United Mortgage Corporation of America. Thank you for listening today on Fox Sports Ventura, AM 1590, FM 94.7, and on K-Earth 101. We got our streaming audience at kvta.com and kearth101.com. We also have our audience that's assembling right now at Your Real Estate Life on YouTube. So we're doing that as well, and we archive our programs on our website where you can get the audio. But you can have your very own program. Just pick up the phone, give us a call. 888-543-3980. That's 888-543-3980. I want to talk to you about your real estate life. What do you got going on? Are you looking to purchase? Maybe you're looking to consolidate some debt. Maybe you're looking to do an ADU, an add-on. Maybe you're trying to add to your portfolio a DSCR loan, a debt service coverage ratio loan in multiple states. As United Mortgage Corporation of America, we're approved in 46 states for DSCR, debt service coverage ratio loans for investors. We're approved for forward loans, reverse mortgages, and home equity lines of credit in 5 states: California, Colorado, Montana, Texas, and the state of Washington. Now, in doing those markets, if you have other markets you want to do business in, I can help refer, make sure you get the right transaction and deal. I could be that bird on your shoulder, making sure you don't get taken advantage of. We've had individuals who are looking to pay way too much for what they're doing, and I want to make sure your money stays on your side of the ledger. So I want to make sure you pay a fair price. Now, a definition of fair could be different. Depending on your circumstance, you could have a much more difficult case. Maybe your credit score, loan to value, your equity position. There might be challenges that lie ahead. So we want to be careful about that. Every loan is a little bit different. But what we do is we evaluate what's going on in the market past, present, and going forward. We want to make sure we take advantage of each of these aspects and making sure we make the right decision and help you to make that right decision for your real estate life. Now, this past week, we saw the labor market and falling interest rates were in the focus. The 30-year hitting its lowest rate since October of 2024. And here's what happened. We had the ADP report. It showed private job creation was 54,000 in August, below the expected 73,000. This was weaker than expected data. It pushed the probability of the Fed cut basically to 100%. They started pricing now about 6 and 7% range that it could be 0.5%. I don't see half yet, but I see that to be very promising, of course, for that quarter that's going to happen in October. So the Federal Reserve interest rate reduction pretty much is certain, as said. It's just kind of nuts how we've kind of gone through the whole year, and we've had various items with tariffs and various other things that had occurred, but we're on track for 3 moves this year. And then easily I see 2 moves early next year. So with that said, that 1.25% total is going to help the prime rate go down. It's going to help the consumer borrowing rates go down. People who have home equity lines of credit are going to be paying less simple interest, and you're going to be able to use that simple interest to pay down amortized interest. And I'd love to show you how that's done. You can join us on Tuesday evening at 6 p.m. here on the West Coast. You can join us. Send me out an email, interest@aheadformoney.com. I'll get you access, and I'll also give you some information to explain it a little bit further. But if I can show you how to eliminate all your debt in as little as 1/3 or 1/2 the time without changing your lifestyle, why wouldn't you consider it? If I can save you $10,000, $50,000, $100,000, in some cases I've seen up to $400,000. I've even seen over $1 million on some individuals who own multiple properties. That's interest saved, and that's money back on your side of the ledger. Let's do it. interest at aheadformoney.com. I'll get you access to Tuesday night's webinar. You don't have to be on camera. You don't have to have conversation. Just good information, 1 hour. And then we could always follow up and see if it's an opportunity that you would like to dive into. I personally made the decision myself a little over 3 years ago, and it actually took me on my personal journey. I thought I knew what I was doing. I was taking myself down to 12.3 years from my 26.4, and it took me down from 12.3 down to 7.9 years debt-free. You know, that 4.4 years, there's over $100,000 of savings. That's what I'm looking to do or help you to achieve. So looking at what happened for the past week, we saw the market reacted swiftly, though, to the August release of 22,000 jobs added, far below the 76.5 economists had expected, but not the $228,000 change that occurred in months prior. We had the unemployment rate edged up to 4.3 from 4.2. Now, in summary, August non-farm payrolls, 22,000 versus 76.5. We had non-farm payroll revised upward from 73,000 to 79,000. We had the June, that was July, we had June revised downward from 14K down to negative 13. So the rolling 3-month average now is very low, 29,000. So we need to see some numbers there, but that's why we're looking at what we're looking at with the Fed. We had wages that moved up by 10 cents, average hourly month over month, 0.3 versus 0.3. So it's what they expected. Year over year, also at 3.7 as expected. And July's pace of 3.9 that we were expecting there. So, you know, marginally, not a great number, but not horrendous. But again, it puts us back on the radar for 100% chance of that Fed cut coming up in the next couple of weeks, with more coming in October and then in December. With that said, the time is now. You need to evaluate what it is you're looking to do. If you're looking to purchase, get pre-approved. If you're looking to refinance, we're not looking to refinance, but looking to evaluate what you have and see if there's something better. Love to evaluate that. And a lot of it's looking at your budget, the ins and outs, the monthly, the quarterly, the semi-annual, the annual items, knowing what your discretionary is at the end of every month. Are you negative every month? Are you positive? Does it vary? Is there other things that we can do to help you do even better? And it's looking at those items. Now we're looking at what is called the jobs openings labor turnover report, JOLTS. It reported 7.2 million job openings, slightly below the prior reading and the lowest in nearly a year. It says, however, hiring and quit rates remain stable, offering some positive news. Now, we look at the service sector growing. We look at that. We're looking at what is going on with the ISM services, PMI reports, various other items that we watch on the lending side for economic news and where interest rates will move on a daily basis. We look at business activity. It's strong at 55%, up from 52.6%. That was steady since May of 2020. We have new orders jump 56%, up from 50.3, signaling rise in demand. We have employment 46.5, a little bit weaker than wanting, showing some hiring challenges. Supplier deliveries slowed to 50.3 from 51, reflecting higher demand. We have prices 69.2% down from 69.9, indicating persistent cost pressures. So all these things, it sounds very technical, and it is. But this is how you got a big business, the economy running. And when that runs and things come out and economic news and the market twists and turns and the mortgage rates move and up and down, we lose an eighth, gain a quarter. I mean, one of my transactions gained over $2,500 in a matter of minutes on an early morning. And all of a sudden we had an opportunity where we waited a day, and all of a sudden, my gosh, nice 2,500. We did well. Now, mind you, we could do better or worse waiting further. But, you know, sometimes you don't want to get greedy, but you want to be appropriate. So the timing was there. So we took it. And that was savings to my client. It wasn't padding anybody else. But we're watching the 10-year Treasury as well. And key support has been that 4.2% number, 4.2% getting below. We got it. We're below 410 now. Are we going to see below 4? I don't know. Now, with the Fed meeting coming, a little bit of pressure. Probably we're going to see a little bit of runoff on Monday just because we've got a lot of profit taken maybe going on. But we went down to what, 4086? 4086. So not only 420 we held, but we went below 410. So if we go back up to 410, 411, 412, it's not the end of the world. But again, as we get the next Fed move and then we start pricing in the next, we can see some activity where now the new floor becomes the new ceiling. So now we're going to bounce off hopefully that ceiling and go lower and not break the ceiling and create a new floor. So a little bit of technical jargon there, but that's kind of what we're looking to achieve and do. Now this upcoming week, we got we got quiet time kind of coming here on the Fed. So we got to kind of watch that a little bit. But we've had some prior now signaling that quarter move. They're kind of writing it on the wall so everyone's not surprised. And of course, it's already at 100% of the futures market. But on the calendar, we have consumer credit on Monday. We have small business optimism report coming out on Tuesday. On the 10th, we have wholesale inventories, PPI, and we have mortgage applications. So we're going to see how many of you are looking to get started, whether you're purchasing or refinancing, refinancing for a reason. We're seeing how that's going. On the 11th, we have the consumer price index and treasury statements going out there, and University of Michigan consumer sentiment. So got a full calendar and we watch that. A lot of news comes out on the West Coast here at 5:30 a.m., some at 7 o'clock a.m. And then the market kind of gets into its daily grind. We see a little bit of the trading going off, lenders pricing loans, sometimes already having a midday price at that point if they made a misstep. Sometimes it's an eighth better in fee. Usually it's not a full rate change, it's a fee change, which means the rate's the same, but it just may cost less to get that rate, or maybe there's money coming back as a result of giving that rate. And that's where you're able to get credits towards close. We've been giving credits towards close of 40 basis points additional from our side. That's something that I've been doing. So that's been helping a lot of our consumers. On various other loans, we've been giving even more, depending upon the type of loan, because it's been available to us to give. So I'm about passing that along and making sure we're getting everything we can, but also spending correctly, giving the right advice for the right reason. Not wasting money that you're going to get back maybe in a few months as the Fed starts moving. There's no reason to buy it down, and there's no reason to wait 71 months in order to see a recovery of the money that would be spent. So it has to be reasonable. It has to make sense. And that's why we do the math. Now, you may not like numbers. You may put them off to the left or the right of your desk or push them off altogether. Maybe that's you. But I tackle the numbers. I put them in the middle of my desk. And that's where I come into play and work for you. I want to make sure that I'm doing everything I can to get the right results for the right reason. I spend your money the way I spend mine. I spend it sparingly. I want value for my money, and so should you. And that's why you have professionals working on your team and for you. And when you have amateurs, they just frivolously spend your money and it goes everywhere and you don't know what happened. And somehow you made it to the finish line, but it was kind of by accident. I don't want an accident here. I want to make sure we watch your checkbook, your monies, your budgeting, and get you everything that you deserve. 888-543-3980. That's 888-543-3980. So when we see news about the employment, we see news about inflation, we see news going on overseas and abroad, these things make a difference. You do what you do best, continue to do that. When I get on the job and my team gets on the job, we do what we do best, and that's saving you money and getting the job done. Majority of the time, we're early. We're ready to close, and we're asking you, do you want to close early? We meet deadlines. The only reason why we hesitate sometimes if there's more money on the table, and then we can play as long as we're early, because I don't need to lock in 21 days, 15 days. I can go 8 days, because when we go 8 days, the lesser days we lock, the better pricing we have, as long as the market's cooperating and we didn't give back the money in the difference between those days. Now, when I lock in 30 days and I pay an extra quarter point in fee or whatever the case may be, I already gave up money just to get that security long term. But if rates are still marketably moving better, let's get that savings. And let's say I'm wrong. Okay, now I lock 8 days, and let's say I lost a quarter. It's the same quarter we lost at 30. So these are things and ways I earn my money by protecting your money. 888-543-3980. If you're working on a loan right now and you're working with a professional, stay with that. But if you want a second opinion, I'm happy to give it. I want to help you and show you where rates are. There are individuals that are keeping that difference, and that's not right. I want to make sure you're getting all the benefits of what's going on in the current market today. And I know that doesn't put me in favor with my fellow mortgage loan originators, perhaps the good ones it should. But I'm not looking to take the deal, but I'm looking to make sure you're getting the right deal. And I'm never too busy to work or speak with you. I always want to help you gain what's best for you and your family, but it's knowing the path, knowing your direction, being perfect with your GPS. The last thing I'd like you to do is go down a 50 miles, 2-lane highway, and on mile 46, you find out the bridge is out, and now you got to make a U-turn and start over. I want you to have this information early so you can make the right decisions, because those decisions are what's important, not the larger items that you didn't get to details. And people making these decisions for you might be okay, but you need to understand, because these are affecting your real estate life and that of your family. And over my 38 years in lending, that's what I do. I want to understand your why and what motivates you and what it is you're trying to achieve. And in doing that, that allows me to help you by giving you the options and choices that exist. And it's just not vanilla. It's just not one loan that fits all. I had an individual who asked about interest only, 40 years, 30 years, all these different types of loans, 5/1 ARMs, all these kind of loans. And it was finding out what really he was looking to achieve to get the right decision, because asking, I didn't know the why. What is it that you're trying to do? Is this a long-term term? What do you have other opportunity? What's going on? These things matter. They matter. So getting the rest of the story is what's important when I figure out what it is I can do. Because I could do a lot of things, but is it the right thing? And that's where I need to talk with you. 888-543-3980. As we head out of the third quarter, go to the fourth quarter very soon, I want to know what your plans are. Are you looking to stay put? Are you thinking about moving in 26? Are you staying put and maybe you've got equity? Maybe we should talk about a home equity line of credit. Well, there's that Mike again trying to get another loan. Well, no, not really. It's me giving you access to the funds that you have buried in your backyard, so you have them in case of an emergency or a need. Many of our clients have had an equity line that they've not used, no payments, but it's there and they were able to write a check when they really needed it. Some have used it for college education for their family. Some have used it for unexpected car item or purchase of a car before they were able to get their expenses in order or free up capital. Some have used it to borrow and not sell securities and create capital gains. There's a lot of financial planning that goes into place when you're getting a line of credit. Talk to your financial planner. Talk to your CPA. I want to help you achieve those goals and have that long-term security. I'm Mike Harris, President and CEO of United Mortgage Corporation of America. My team's waiting for your call right now. 888-543-3980. We'll have more after the break.
Looking for a place to start? United for Loans is the place for you to start your refinance or purchase process today. Call 888-5433-980.
Yes, it's a little scary right now, but every crisis presents an opportunity. How many times have you looked back and said, why did I act? Do not try to navigate lending without a map. Tune in Sunday at 7 a.m. on KEARS 101 with host and CEO Mike Harris of United Mortgage Corporation of America to discuss your real estate life. What should I do? Buy, refinance, sell, or hold? United Mortgage Corporation of America is open for business and ready to lend. Visit unitedforloans.com or call 888-543-3980.
Lending can be a bit confusing. Numbers can be tossed from one direction to another. How can you make it all stop? United Mortgage Corporation of America, unitedforloans.com. Call directly at 888-5433-980 for what you need to know when financing a home in your dreams or commercial property. Call now at 888-5433-980 or visit at unitedforloans.com. That's 888-5433-980.
I've been laid up from work, my rent is due. My kids all need brand new shoes.
Welcome back to Your Real Estate Life. It's your day in real estate radio. I'm Mike Harris, President and CEO of United Mortgage Corporation of America. We're going to look at jobs in the labor market, but first, let's turn to the real estate insights. Joining us is Lori McShane, your trusted realtor, bringing local knowledge and expertise to help navigate today's housing market. Lori understands what's driving home values, buyer demand, and opportunities. Lori is a certified divorce specialist and understands unique challenges that arise when navigating real estate transactions during a divorce. And it extends beyond traditional and real estate services. Her list and go strategy, it's incredible. Lori, what do you have for us today?
I don't know about you, Mike, but September always feels like what you said. Kids are heading back to school, routines are shifting, and households are adjusting to new schedules. For most, it's a busy season, but for those going through a divorce, back to school may shine a light on challenges we didn't expect. From juggling co-parenting schedules to managing the extra financial strain of supplies, tuition, or activities. I remember when my own life shifted, it wasn't just about the emotions. It was also about practical things like school schedules and making sure my son had stability during the change. And that experience opened my eyes to how overwhelming these decisions may feel. It's also why I became a certified divorce specialist in addition to being a realtor and help others explore their real estate options with clarity and instead of feeling rushed into choices. And that's why also I built my signature list and go strategy to help people prepare their home in a structured, supportive way so they avoid added stress and keep more predictability in the process. On Talking Divorce with Dawn and Lori on Pasadena Media's Arroyo channel, we've discussed how back-to-school transitions overlap with divorce and raise big questions. Should we stay in the same district? Should we sell the home? Or may one spouse refinance to keep stability? How do we plan for the future when emotions and legal issues already feel heavy? And here's a practical tip. If you're selling during a divorce, involving the kids in small parts of the process may help them feel more balanced. For example, if staging is part of preparing the home, they might want to help choose a pillow color or tidy their room up for showings. It's not about big decisions, but a small role may make the transition feel less overwhelming when they come back into the space. These are real estate decisions, yes, but they touch people at every level. And that's why I share insights in my Untying Knot column with Local News Pasadena and why I created this video to give a structure and reduce the overwhelm. So if you're feeling that back to school stress layered on top of a divorce, no, you're not alone. And there are resources to help. You can catch expert conversations on Talking Divorce with Dawn and Lori on our YouTube channel at Talkin' Divorce Pasadena, and Talkin' has no G. Or you can find solutions in my upcoming Untying the Knot column at localnewspasadena.com. So stay tuned because while back to school is the focus now, we all know that holidays bring a whole new set of challenges. We'll be talking about how to navigate that next time here on the Real Estate Market. So thanks again, Mike, for having me on the show.
Thank you so much, Lori. Such powerful information coming from Lori. For those of you who are going through a life transition or looking to list or looking to buy, Lori's your person to talk to. So get in touch and talk to us on the program, and we'll get you in touch with her also. But 888-543-3980. That's 888-543-3980. As I said, you've got to have a professional team. You get information, you digest, you get, and you're able to make decisions a lot more clear. That's what it takes. Take your time, but also understand that time may be costing you opportunity. So gather, get, and make decisions, and have others gather that item for you so you can make the right move. And it's not always just getting on the computer these days and asking a question and then believing what you got. I've gone through that as well. Just because it said something or gave you something doesn't mean it was the right thing for you. So you got to be discerning about that also. So it's advice, it's information, and it's based upon past and performance, of course, of what has occurred. But your future performance is not guaranteed. It gives you better information. Now, that better information is what I had been talking about, a perfect financial GPS. Organizing things and making that decision. And that's why I'd like you to join on Tuesday so you can see if it's right for you. It's not right for everyone. I like to rule out who it's not right for because it's right for most. It's just people resist change, and change sometimes is good. So let's get that. Send me out an email, interest@aheadformoney.com, AHEADFORMONEY.com, and I'll get you out an invite to Tuesday evening at 6 p.m. You're going to see illustrated what this is all about. You're going to see that it can actually eliminate debt and all your debt in as little as 1/3 or 1/2 the time without changing your lifestyle. This is not some debt forgiveness. This is no IRS thing and oh my gosh, you can pay taxes. And it's not eliminating your principal. You borrowed something, you owe it. It eliminates the interest volume, the amount of interest that you're paying over the life of that loan, whatever that life is. My goal is to make that life shorter, allowing that interest to evaporate. Interest cancellation. Just because the interest was given to you as a sentence doesn't mean that you need to go through the whole sentence. You can get out on good behavior. And good behavior is understanding debt. Understanding debt so it can be paid off, so it can create wealth. There's various stages that we're going to help you with. You're not on your own. We're not throwing you out of the nest. This is a process where you have access, customer service, you have advice, you have coaching. All of that's there, and it's not as complicated as it may sound. It's perfect information coming to you. It's someone smarter in the room than both you and me and many others combined that doesn't talk back to you and gives you perfect information. 888-543-3980. That's 888-543-3980. Now, I mentioned about what we were doing here and looking at some of the information, and we went to Lori. We're looking at the labor market. We're watching about what's happening there and how important that is along with inflation. And what I've been doing is I've been watching this carefully because our clients have been winning. They've been winning by saving money. We've been lowering rates. All of our closings over the past months have closed at lower rates than where we have started. And that savings has gone in rate or fee. That fee savings has been incredible. And the amount of fees that are being saved up because of the rate have been lowered, it's saving every single month. But that's where I watch things carefully, because if rates continue to fall, as I'm seeing happen, I don't want to spend a lot of money up front to buy the rate lower. I want to go even, save the money. And if 6 months, 8 months down the line, we can save more money and we didn't spend all the money that we would have spent to buy down the rate to that level, that's your money. You keep it. It's better on your side. I just don't want you buying expensive habits, toys, and other items to get you more in debt so we could sit here like a piggy bank. That's not the goal. A softening labor market can need faster action from the Fed. We're going to put all that together and come up with a plan that's right for you based on your timeline, purchase or refinance, going forward or in reverse. But it's putting that plan together, and it's utilizing a perfect financial tool that will allow you to get through and navigate for your real estate life. Join me Tuesday night, 6 p.m. Send me out an email, interest@aheadformoney.com. I will send you, not automatic, it's me, it's not AI. I'm going to send you out an email with an invite, and I'm going to see you there. We'll have more right after the break.
Get pre-approved for your home purchase. Your landlord loves you. You're making their mortgage payment. Own for less than you pay for rent. Call 888-5433-980.
What if I told you everything you understood to be true about money is not? If there was a program to eliminate most of your interest in your life and pay off all your debts, personal or business, even mortgages, in as little as 1/3 to 1/2 the normal time without refinancing and without changing your lifestyle, would you want to learn more? Call 888-543-3980 and request your information today, or email at interest@aheadformoney.com. That's interest@aheadformoney.com.
Money, 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 must be funny in a rich man's world.
Welcome back to Your Real Estate Life. It's your day in real estate radio. I'm Michael Harris, President and CEO of United Mortgage Corporation of America, NMLS 3189, MLO 233410. These are licenses. These are company licenses, personal licenses. As I mentioned to you, I also have a real estate broker's license here for the state of California. I don't list, I don't sell, but I have a broker's license. Back in the day, you had to have a sales license or a broker's license to do loans. Of course, now it moved to different other licensing and other systems, which I also have. But my license, pretty easy, 00991234. So I do have that license as well. But, we're talking to you today about all things, the economy, interest rates, various things happening with rates going lower, and talking about inflation. We talked about moderating inflation a bit, closer to that 2% target. The Fed is poised for those cuts. We're looking at those cuts 3 times this year and possibly 2 more early next year. So with that said, mortgage rates have been getting better. We saw the 10-year Treasury now getting up to 4.086. So we saw it breaking 420. That's been a big barrier. Every time we hit 420, went back to 450, and then back and forth, back and forth. So we've been kind of running that back and forth and saving money. The bottom line is now 4.086. We'll see if we can get some more momentum prior to the Fed move. But usually we'll have a little bit of a push off before we get better. So we might be some of our best levels right now for some of our clients to move forward based on their timing. And we're making those decisions and moves together. So as we're hearing the program today, you can actually catch it on YouTube. You can go to yourrealestatelife.com. You can also go on our websites, yourrealestatelife.com on the website, or also unitedforloans.com, forloans.com, and you get audio there as well for our past programs and going back, a dozen years or more. So not that I want you to go get bogged down and listen to all those programs, because you can have your very own program. Let's call 888-543-3980. I want to talk to you. I want to find out what's going on. Where are you? Are you working with a loan officer right now? Are you happy with what's happening? That's fantastic. I don't want to infringe upon that relationship. But maybe I can share with that loan officer some strategy about how they can help their past clients achieve more with a perfect GPS. Love to talk to them about that. Love to talk to you about that. You close with that, and then we're going to help you have a better, stable point going forward, making sure that you can afford the home that you're buying and actually pay it off in a more responsible way and saving you more money. So if I can't help you originate the loan, maybe I'll help you pay off the loan much more efficiently. I'd love to help on the financing if the option is still open. We've done some rescues over the past few weeks on some transactions that were going a little bit wrong. and a couple of tweaks, and they should have been done, but they weren't. And we were able to get those done and move in very quickly to fix it. So I could take the ball in the first inning, or I could take it in the middle innings, or I could take it in the ninth. I'd like to get the ball as soon as possible to make sure we have all the options available. But sometimes I come in and we'll save and get the job done and make it all work out well. But give me an opportunity. I'm never too busy to work or speak with you. I've been doing it for 38 years, and I like to think I know how to get the job done. Not that I've seen every single transaction that ever will exist, but I've seen a lot of them. And I kind of have that roadmap or that plan to get the job accomplished and done, communicate properly with the realtors and everyone else involved, making sure all things lead to your successful acquisition of the property, if that's what you're intending to do. So again, we're watching the inflationary target. We're looking at the Fed looking to close on their rate cuts that they've so-called have been promising, and everyone thinking has been coming, but now it looks like it will. 100% chance for the one coming here in September. Already pricing in now. Very good chance, and very confident for October, and then also in December. The job market is looking to soften a little bit. We're looking at buyers who are looking to refinance. It's a critical moment. Lower rates are on the horizon, and they're already here. We're already at 2025 lows. We're already broaching into 2024 lows. We're watching those very carefully. We're watching the upcoming consumer price index, producer price index reports. They're going to go ahead and confirm what's going on with inflation. We're watching jobs data and how the economy is cooling. We're seeing people getting pre-approved by providing their documentation rather than just saying, oh, it's this and it's that. Because when people call me up and say, Mike, what's your rate? Well, what do you want to hear? I don't know. What's your credit score? I mean, not your consumer score, but your mortgage score. And of course, we can go find that out. But your consumer score is a little higher than your mortgage score. And then you have a car score that's in between. So we kind of work with that. I want to ask if there are any surprises. I mean, we had an individual who had a $84 collection account with a phone servicer, and it caused her score to go down. So these things are important because score will matter. Loan to value, equity will matter. All these things matter. So when someone asks me, what is your rate? I don't have a perfect answer, and it requires more questions. So that's what we do there. As far as investors out there, we're finding investors are looking at some of the falling rates are causing a little bit more purchasing power, but we also have what is called DSCR, debt service coverage ratio loans. These loans are being utilized by investors as rents are covering taxes and insurance and the mortgage payments. So we're actually really kind of lending on the property, but of course we do want to see stronger credit scores because that will help pricing. A lot of these loans will come with a lot more easier guidelines and getting the loans accomplished and getting the property. In some cases, though, the rate could be just a little bit higher because you're buying for a different purpose or a different reason. It's not primary, it's secondary as an investment. So we'll go over those aspects as well, and the need of looking to qualify with tax returns versus not. Some individuals, self-employed, will write off, and your bottom line income wouldn't be sufficient to qualify utilizing your federal tax returns, 1040s or 1120s, your corporate returns, 1065 partnership returns. So we will look at the best way to accomplish your end goal. Now, lower rates will generally mean more affordability for families because it improves the consumer section where the prime goes down, and we're looking at equity lines that are better. Maybe lower payments frees up additional monthly monies to pay off other debt or use it for better flexibility for budgets and managing items. These things are very, very important. Life and budgets are moving, and it's a question of knowing what's coming. It's not seeing, it's funny, I go to this thing many times, but when people are in line and everyone gets in line and then you tap the person in front of you, what are we in line for? You got to know what's coming and what's happening and know the decisions you're making and why. And I want to make sure you're on top of these things because they are important. They really, truly are. They are. They're all about your real estate life. And And I have a passion for helping people save money. And I found that through lending because it's one of the largest items you'll look to take on. But just because it's the largest payment doesn't have mean it can't be working right for you, because you're leveraging your dollars to earn a better return for your family, your home, or investment. And it's having the right loan. Choosing a loan because so-and-so told you to go do it doesn't mean it's the right one for you. It may have been the right one for them, but you have different goals, different life, different job, different things, family. I was talking to a couple the other day. They have 2 kids, both below the age of 2. A lot of decisions, a lot of things going on. They're learning how to use buy diapers at the larger warehouse lenders, warehouse stores, shopping, groceries. But different things. I got a 24, 26-year-old. I make the joke they're going to be changing my diapers soon. I'm teasing. And then I'll throw the next joke. It really depends. Okay. All right. Stop it. I'm giving you a hard time in the morning here. But I want to make sure you know where it is and what's affecting you with your current decisions, whether you're just getting started or are you on the other side? Or has the family come back? Where are you with the college planning if needed? Is that equity line in place? Have you done the college plan that perhaps maybe you did a Roth IRA for your kids because of your self-employed and your company and all that, or maybe you did the 529, or you did this or did that, or you didn't do anything and now you're trying to scramble because you have equity in the home. The money's buried in the backyard and you're looking for bank statement loans for equity loans and lines, and which can be done. And you're looking for qualifying and getting those in place so you're ready to go. So dad's ready or mom's ready for the decisions that lie ahead. I want to make sure these are there and the planning is there and someone else is doing that heavy lifting for you. Over the years, I've kind of made sure I was doing that. At a young age, while I was still single, I had my disability policies. I had some life insurance. I started my retirement account at a young age. When I eventually then did get married, had a family, I expanded certain areas and items to those things, kept those in place as long as necessary or needed, added long-term care, continued on that retirement side. But at the same time, I also made sure my kids were set up correctly. Both of them have graduated a 4-year university. My daughter's getting her master's degree, and they have no student loan debt. They still have money left in a Roth IRA that was utilized and planned for college education. And they have money there for their future, non-taxable, because it was already taxed at a young age at a low rate. I want to make sure that you can either set up things with your financial professionals, or we can catch up on things as available to you. And it really does start on Tuesday evening at 6 p.m. Now, I can set up an individual time with you on the weekend or evening or during the day. We can do exactly what Tuesday night can do, and I could do it individually for you. But if you're looking for a general item, 1 hour, that's giving you some background, some information, I'd like to send you out an invite. Michael, or actually we'll do it this way, instead of my personal, which you can do, but we'll go interest@aheadformoney.com. I'm going to send you back an invite. I'm going to send you back a few links that you can watch short, but give you a little bit more background. And I'd love to see you there on Tuesday night. One of my dear friends is going to be doing that presentation on Tuesday evening. But I'll be there. You'll see me on camera. I'll put my radio background on. You'll see it. But I'd like to have you gain more information so you can make an educated decision, because I really think it's going to be a great one for you, wherever what stage you're in. We've had 20, 30, 40, 50, 60, 70, up to 70 years of age making these decisions, and they've made a huge difference. A huge difference. When you pay off debt, in record time, and it was always available to you, because numbers don't lie. They're finite, but they can play tricks on you if you don't understand them. It's like every month when you have decisions to make, 720 decisions, factorial math, when you have 6 different ones in front of you. You get it right one month, good luck. You got to do it again another month. Oh my gosh. Huh. You know, make someone go lose their hair. Oh, I'm sorry. You don't have to see me on camera. I've already lost my hair. I'm trying to keep my brain cells in at this point. Been doing lending for 38 years. That's what happens. But my goal is to make your life less stressful. And money stresses a lot of people out. I know, whether it's lack of, or sometimes it's having too much and people make wrong decisions with it. And then when they don't, they got reliant upon having it. So it's budgeting. It's doing things properly and understanding how it behaves. And this is what I want to try to do and help you with, whether I'm helping you on lending or not. But I truly want to help you with your next transaction for your friends, family, or your coworkers. Who do you know that owns a home, may have bought or sold or done something in the last 2 years, or maybe they're sitting on that low rate, but it's strangling them because they're not able to make other decisions. Maybe they just want to pay off things and be in a better financial position. I value your referral. I'm never too busy to work or speak with you. 888-543-3980. I'm going to be standing by after the program, and I'm going to be working also on Sunday to pick up the calls, making sure each and every person is talked with, listened to, and understood what goals you have and what it is you're trying to achieve. Whether you're trying to pay off debt, create wealth, add to your portfolio by adding more doors, investment, looking for referral in different markets to professionals, realtors in those markets. Always very careful, 1 syllable, not 2, realtor. It's very important to work within the bounds of having a professional team, because it can be very expensive to unwind what amateurs can do for you. I want to make sure you have that right information. And it starts with you. But if you can refer others, I would love to talk with them. And it may be right, it may not be for them. Whether they're purchasing, looking to refinance, pull cash out, buy that investment property. I want to be there for you and them. 888-543-3980. That's 888-543-3980. It's been a pleasure. It's been a pleasure talking to you today about your real estate life. We're here to help. On today's program, we talked about what was going on with the market and the economy. Next week, we're talking about up and down in the Fed and the Fed factor. We're going more into diving into that. You got to remember, your decisions today can save you thousands of dollars tomorrow. And it's making you aware of these decisions and breaking down the news, your interest rates, opportunities, what matter to you most. It's all about your real estate life. Call us today at 888-543-3980. I'm here to help you navigate the market, shape up your money and your future. Until next week, what kind of loan do you have?
United Mortgage Corporation of America, UnitedForLoans.com, will continue to take your calls after the program. Call now to start your home loan process at 888-5433-9.
You know, I get so excited as I'm here. You know, I've been doing it for 38 years and I still have this excitement because I love saving money. I love doing it for others. I've done it for myself for so many years. And when I'm saving this or I'm saving that, 400 here, 100 here, I got excited last week. My cable bill, I cut it in half. My gosh, it was like $100 less, but it's $100 every single month. You know what $1,200 means? That's a lot of money. I want to help save your money, and I want to even save more. We'll talk next week.
And they have said nothing about the